I've been calling for a significant correction in big tech and a popping of the AI bubble for a couple of weeks now. I've also just finished watching the most recent episode of the All In podcast, and it sounds to me like a few very reputable individuals may be feeling the same. Cue chamath.
Gone through. So, yeah, I think that we are in a bit of a reckoning right now. It's going to be a complicated couple of quarters at a minimum, and probably a complicated year to sort out who's actually real.
Okay, so in this video, I want to go over a few excerpts from this segment of the recent All In podcast, and it's actually titled AI Sentiment Turns Bearish Due to Massive Spend with Little Revenue. I have a few timestamps that I made, listened to this a couple of times, and really got what I feel are the most important segments of this specific segment itself to share with you guys. So I'm just going to play over each of these. I got 4 excerpts ready for you guys. We'll play over each of these. I'll chime in if I feel necessary, but I really want to just let you guys hear what these guys have to say if you haven't heard this podcast already. And afterwards, I do encourage you to go check this out for yourself, because the entire segment and really this entire podcast is fire. So we'll watch over this once again. After we finish that, we're going to dive into the charts. I want to take a look at the darling of AI and really kind of the focus of what this segment that we're going to be watching is about, or obviously the king of the AI sector, and that's Nvidia. I want to talk about why Nvidia looks poised for a wave to the downside. And again, if you watch my recent video on the Nvidia bubble pop, you know I feel this way. I just want to make it clear up front before we move any further. I do believe that what we're seeing in AI is tangible. I do believe that artificial intelligence is the next frontier and really the next evolution of the technological revolution that we've been going through for the past century. But that doesn't matter. What matters is current valuations and the fact that going parabolic like this simply isn't sustainable. I also want to reference the two-wave theory that we know very well around here. We coined it ourselves over here at Waves Capital, and why this looks like a very textbook two-wave kind of coming to an end. Okay. I also want to take a look at the NASDAQ, or the QQQ on the chart, the NASDAQ 100, tech-heavy American ETF. Tech Titans pretty much make up the entirety of that ETF. So we'll take a look at that. I want to talk about why that also looks poised for a short-term correction. And again, notice how I say short-term correction. This is a correction. I don't think we're going to crash. I don't think this is a market crash. I think that we've been rallying maybe a bit too hard and maybe getting a bit too ahead of ourselves over the majority of 2024. And I do think that a meaningful correction is necessary for a healthy continuation of the overall bull market. Okay, after we take a look at the Nvidia and the NASDAQ, I want to talk about a couple of ways that I'm personally playing this. Some put options I have that aren't Nvidia, but I do think can really provide an amazing profit if I'm correct about this, and some call options that I'm really excited about, because there will always be diamonds in the rough. And personally, my options portfolio is currently 90% call options on small cap gems that I'm really excited about, and 10% put options on the play I'll mention later on in this video. So before we get to watching, before we go over some of these timestamps that I have ready for you guys, if you want to know how I'm trading my personal portfolio on a daily basis, it's going to be the first link in the description of this video. It's my complete portfolio, daily trade alerts, email newsletters. This is an example of just what one of my daily trade alerts looks like. Send these bad boys out every single day, go over charts, go over price targets in real time. Also send out another newsletter later in the day going over crypto and Bitcoin. So if you guys want to know exactly which options I'm holding, which call options I have, which put options I have, which stock positions I have, then once again, it's the first link in the description of this video. With this, you'll receive everything that this box entails, all four. You select whichever pricing plan you want. It's completely up to you. So if you do choose to become an official member of Waves Capital, if you want to ride the waves with us, thank you. Welcome to the team. Welcome to the winning team. But if not, no worries at all. I appreciate you watching this video. So speaking of watching, let's watch these. Let's kick it off with the first timestamp. This is actually the last clip we're gonna get to. So we'll bring it full circle back to this at the very end. Let's get this. So 1830 is the first segment that I want to bring up. Okay. Hopefully this is loud
You
enough.
want to hear an interesting factoid?
Yes, please.
Yeah. there was an article in Bloomberg. I sent it to Nick, but people have been tracking the S&P 500 index versus the equal weighted index. So when you calculate the S&P 500 index, you weight it for the market cap. So the top 7 or 8 companies obviously get a lot more weight in it. And so they look at the spread between that index and an equal weighted index where every 500 companies are, the 500 companies are each equal. And what's interesting is the spread right now is the most extreme since March of 2000, right before the dot-com crash.
Jesus Christ. Thanks, chamath.
Well, this is Bloomberg's data, so I'm just repeating it. I read that article, but
That's incredible.
it's a tie into the AI thing, I guess, that we're going to talk about soon. But
Next, yeah.
Okay. So before we move on to the next one, that's very important. The Magnificent Seven, as I'm sure many of you have heard, are, Apple, Microsoft, Nvidia, and then the other 4 that I'm just not gonna mention, and I can't really think of right now. But the Magnificent Seven have really been the culprits, the positive culprits for the growth that the NASDAQ and the S&P 500 have been seeing, because they are market cap weighted. The fact that Nvidia and Apple alone are $3 trillion and consume a meaningful portion of the S&P 500, results in those two doing well. Those two doing well results in those indexes or indices doing really well as well. Okay, so again, when you see that balance, as Chamath just said, when you see that balance in the markets, the market cap weighted versus equal weighted, and just kind of the disputes there, that signals, or at least it's signaled in the past, the last time that we saw this disparity between the two was prior to the crash of the dot-com bubble in 2000. So that in itself doesn't mean that the market's going to crash. That doesn't mean that tech is going to fall off a cliff. But I will just say that history doesn't repeat itself, but it does tend to rhyme. And that, I would say, is definitely maybe not a red flag, but that's definitely an orange flag. Maybe even a red-orange flag. Okay, so moving on, let's take a look at 2255. 2255. That's close enough.
Freeburg.
Okay.
You cannot spend this kind of money and show no incremental revenue potential. So while this is incredible for Nvidia, the chicken is coming home to roost. Because if you do not start seeing revenue flow to the bottom line of these companies that are spending $26 billion a quarter, the market cap of Nvidia is not what the market cap of Nvidia should be. And all of these other companies are going to get punished for spending this kind of money. Where are all these newfangled things that we're supposed to see that justifies $100 billion of chip spend a year, $200 billion of energy spend, $100 billion of all this other stuff? We're now spending $750 billion. This is on the order of a national transfer payment. And we've seen nothing to show for it except that you can mimic somebody's voice. It doesn't all hang together yet.
The general statement might be made that perhaps the first AI mini bubble is bursting a bit, and particularly with respect to the accelerated expectations that public market investors had for public market technology stocks, that perhaps now is the time for a bit of a reckoning, that perhaps this isn't going to happen at the same margin level or the pace that folks had modeled.
Correct.
And this is going to cause a bit of a setback.
And so
Boom. Okay. Next one is going to be 2510, and then we'll move on. We'll round it back out to that Chamath clip that we opened the video with. Okay, so 2510. This is a quick one right here.
on June 25th, a couple weeks ago, Goldman published a 31-page report called Gen AI, Too Much Spend, Too Little Benefit. So you heard it here first on the All-In Pod, and I think everybody's kind of catching up with this theme. Companies are going to spend $1 trillion, according to the report, on AI CapEx over the next several years. Usually that's 3 to 5. I'm going to use the word several. AI productivity gains are limited in the near to midterm, the next 10 years, and AI's ROI is likely significantly limited due to costs. The costs of AI are so high, and the revenue is so unclear, there's a chance the economics never make sense.
Okay. That was a little more tangible, and again, that's playing into the fundamental aspect of this, and kind of what I was saying in the beginning. It's not also that, I mean, on top of the economics potentially not making sense, we won't know how this unfolds until it actually unfolds. The valuations are the issue. because people, the valuations and forward PE ratios of these stocks, Nvidia currently sitting at a PE ratio, which is price to earnings ratio of 75, when a historically healthy PE ratio for say an Apple or Microsoft is 25, even 30 is really generous. 75 is implying that Nvidia will continue to grow at this pace for the next half century. Okay, and that's simply maybe I'm not an expert in this field, but that just doesn't make sense to me. That doesn't make any rational sense to me just from at face value. I don't think that that's possible. And again, it's not that I don't think that this is a massive revolution in technology. It's just the fact that the valuations are getting extremely overblown. And also, again, I'm a trader. I trade technicals. This chart is a chart that I've seen many times in the past because I also specialize in hype cycles. And this is a very, very, in my opinion, this is a chart that looks like every other hype cycle I've ever played in my history of trading. Okay. So again, we'll get to that chart. Let's close it out with this final, again, round it back out to that chamath clip. The beginning of what I just showed you at 27.20, right? Boom. Oh, chamath, tweaking out. Okay, here we go.
Support. So there's just
Last
a
one.
big mismatch. Second is that we have a huge problem with Nvidia, and I'll just kind of say the quiet part out loud, which is you can't spend this kind of money to have technology lock-in to one hardware vendor. And that makes no sense. And what you're seeing now is that Amazon, Google, Microsoft, AMD, Intel, a plethora of startups, Grok, everybody trying to make now different hardware solutions. The problem, though, that creates is that we have this massive lock-in right now because the code is littered with all these NVIDIA-specific ways of implementing access to GPUs. That's not sustainable. So we're in a bit of an existential thrash. And I think the only way that we're going to get around this is to do a little bit of a reset. And I think that's going to touch a lot of startups that have already taken down way too much money at really insane valuations. Part of that was just because we needed, I guess the market wanted a place to believe in again after the crypto meltdown and after all of the other SaaS meltdown.
That's a bar.
All of the other stuff that we've gone through. So yeah, I think that we are in a bit of a reckoning right now. It's going to be a complicated couple of quarters to, at a minimum, and probably a complicated year to sort out who's actually real.
It's interesting psychological.
Full circle. Beautiful. Okay, so we can close that up. Thank you all in, boys. Again, go check out the full podcast and that full segment if you're interested in the entirety of the thing. But I hope you guys got some value from that. So, like they said, and like I've been saying really for the past couple of weeks, it's not the fact that AI isn't critical to the future of technology and the future of business and many applications across the tech sectors and even not tech sectors across all businesses. It's just the fact that things are getting too overextended too fast. Okay, and that's exactly what this Nvidia chart shows. And as I just said, I've been playing Bitcoin since 2016. I've seen pretty much every hype cycle that's occurred since 2016, and I've played it. I've traded it myself, and thankfully, I'm proud to say that I've traded it pretty successfully. I typically trade the hype cycles pretty well, and that's because I'm aware of the emotion and really just the way the charts look. Because with every hype cycle, every chart shares a lot of similarities, and that's why I coined the two-wave pattern or two-wave theory many years ago. And it's because you get this first wave right here. And again, Nvidia has been climbing consistently for forever. But the two-wave theory consists of two parabolic movements. You can see here, this is the first parabolic move that kicked off at the beginning of the year from January to March. After that, we went sideways down a little bit, capitulated, corrected. And then after that, we got the second wave up. It's very rare. I can't say that I've ever seen this in my decade of trading and definitely playing hype cycles. This never happens. This has never happened. That you see a third wave, okay? Because Nvidia just went parabolic. We got that correction. Right now, I think we are getting what's called a dead cat bounce, which is where you get kind of a relief rally following a sharp, sudden sell-off, followed by that real correction, that next wave down. And I don't think Nvidia crashes. I think Nvidia ultimately comes down within the range of $97 to $101. 97 is the previous high and also the bottom end of this gap range that constitutes kind of my higher price target at like 102, 101, 102 is this gap range. But I wouldn't be surprised at all to see Nvidia sell off. We're at 130 at the time of recording. I wouldn't be surprised at all if we saw Nvidia sell off to about $97, retest the prior high of this rally, close this gap range. This also coincides nicely with the 100-day moving average. You can see right here, this green moving average. I don't think we come down to the 200-day moving average. That would just be bonkers. It's possible, but I think that the price range of 97 to 102 is a reasonable range. And I don't know if we see it next week. I don't know if we see it the week after. Nvidia announces earnings. When do they announce earnings? Nvidia announces earnings on August 15th. August 16th is a big options expiration date, so that'll be a nuts week. But I don't know if if it sells off into earnings with the as investors kind of anticipate a lackluster earnings report. I don't know if it takes that earnings report to sell off. But ultimately, I can pretty confidently say, within the next definitely 3 months, Nvidia does see around $100. Okay, and again, I want to make clear that shorting Nvidia is sketchy, is very dangerous. I personally don't even have any Nvidia puts on deck right now, but what I do have is TQQQ puts, and that is a 3x leverage ETF of the NASDAQ 100, which we're going to look at now. So again, just for the purpose of this video, and for those of you who are going to be like, what, like, then short with your net worth. I got some of those comments. That's a ridiculous thing to say, by the way. That's just a foolish thing to say, honestly. But I will be buying some Nvidia puts probably in the week ahead. But right now, I do have some TQQQ puts once again, and that's because I think the NASDAQ 100, which we're looking at right now, is due for a correction. Okay, I do want to say, as for also with the 1D RSI, not looking good. 1D RSI is below its exponential moving average, nowhere near oversold levels, which is where my cursor is hovering down here. I do think we need to get a little more oversold than this for a flash crash. And it looks like 1-day stochastic RSI also is getting ready to curl down. This doesn't look bullish to me. Okay, NASDAQ 100, and then we'll close it out. NASDAQ 100 has been in a strong ascending channel. Lastly, sorry, I forgot about this. This is what I have this here for. If we were to correct to $97, I just wanted to make it clear that we would still be up over 100% from where we began the year at about, you can see January 4th right here, we're at $47. So even if we do correct all the way down to $97, we'd still be up over 2x on the year. And that's important to remember as well. Okay. So moving on to the NASDAQ. NASDAQ, obviously, as I alluded to in the beginning, Nvidia climbs, Apple climbs because they're both $3 trillion. These indices are market cap weighted. These two have been ripping as well. Okay. Whereas we started the year over here around 400. We're currently up to, we hit 500 just a couple of days ago. And again, all good things have to come to an end sometime. The party's got to end somewhere. And I don't think, again, the macro party's over. I do think that, we got to get some sleep, though. Okay. So as far as the short term is concerned, this one's a little more short term. I do think that the NASDAQ corrects ultimately down to a price of about $465. And this will likely occur. This will happen probably around when Nvidia corrects, if I'm correct about that. Okay. First of all, I do think that in the short term, if you guys are watching this, this weekend or in the week ahead, before July 19th, I do think that at the very, very least, we correct about 1.5–2% to retest the prior high, the very short-term prior high of this rally. That would take us to about 487. From there, I think we come down just over 3% to test my conservative line of resistance. This would be absolute resistance. This is what I'm calling conservative resistance, multiple touch points, multiple candles. No single candle wicks when drawing trend lines. Always remember that. I do think that worst case scenario, I wouldn't even say worst case scenario because I think we can fall further. That's why I have here. In 4 days, we fell 6.5%. Just remember, things can happen fast once they start to unravel. So just be aware of that and just stay hedged. If you guys, even if you're feeling bullish, always hedge. That's what we do over at Waves Capital once again. So I do think from there we test a conservative line of resistance. That would result in about a 480 QQQ in the week ahead if that happens. And then over the next couple of weeks, I do think we continue to correct ultimately until we see at least a 6% correction from current levels at 495 to retest the prior high of this rally that has yet to be retested. I also think that we're going to be filling this gap range that should provide some support as well for those of you who may be trading this. So bearish Nvidia, bearish QQQ, very bearish, a 3x bearish TQQ. That's why I've put options on those right now. And bullish on small caps. As I said earlier, I do think that small caps will thrive. Watch the video I posted right before this one for rationale on that. But my portfolio, once again, is 90% call options. It's only 10% puts right now. That may change a little in the week ahead because I do think we correct, so the put options are going to appreciate a lot more. We'll see. But stay hedged, you guys. Stay excited, though, because, again, this is the environment that Waves Capital thrives in. We love these small cap. When small caps get love, that's when we make a lot of money, okay? And, again, I can't promise anything. I can't promise any results, but I haven't lost any money over the past 4 or 5 years now. And I've made a lot of money over the past 4 or 5 years just trading. So if you want to join Waves Capital, once again, it's the first link in the description of this video. Join the winning team, and we look forward to having you. If not, appreciate you watching this video. I hope you guys enjoyed it. This was a fun one to make. And yeah, just let me know in the comments down below what you're feeling about the markets. If you agree with me, why you agree with me. If you think I'm an absolute chump, let me know why. And I look forward to talking to you guys in the comments. Until next time, always remember, take action, make waves. Peace, guys.